the Bitcoin grave dancers are out. The legacy media is shitting on Bitcoin as usual. And it looks like it's going to get a bit worse, but maybe not that much worse. Like it looks like most of this is behind us. Personally, I'd be looking at the, let's say 48,000 area as sort of a floor price. And if I may indulge in some male astrology here, 48K acted as a resistance during the 2021 bull market, resistance for that dead cat bounce during the 2022 bear market, and support during the 2024 bull market. So a lot of confluence there. It's also sufficiently below the 200-week moving average, which is usually, an appealing place for long-term buys. And it would also be below the average realized price, which is currently at 55K. And we do go below the realized price in bear markets. We went below it in 2022, 2018, and 2015, and also 2012, but maybe 2012 isn't relevant.
What is the average realized price?
It is the average price that each coin last moved at. So it basically gives you an idea of how many people are in profit or loss. So it's like a pain gauge. And
you're saying that it's currently at 50?
55. 55 according to and this is just the average. Like you can look at the realized price for certain cohorts, long-term holders, short-term holders. I'm looking at the average
overall.
And that is usually lower. And it's usually lower. Like that actually is not the best pain gauge because most people didn't buy in 2012. So the average is skewed by the OGs who have a much lower cost basis. I think if you look at long-term holders or short-term holders, there's a lot of top buyers who are in pain, like people that bought in the summer or September, October. If you look at those cohorts, then they're in a lot more pain.
Okay, so the chart I've got here is looking at the everyone included, and it's still the current price is still above the average realized price there, like the global average realized price, right?
Yeah,
but
so it suggests we could go a bit lower.
Yeah, although as you mentioned, right, there's different cohorts to talk about. So one is the ETF cohort. Now it seems that their average cost basis is $82,500 for the US ETFs. So the average ETF buyer is now underwater.
Yeah.
Now, you could argue that is another signal that we may have, or I mean, okay, how do we know when we've bought it? We've got all these indicators, okay, but it's really at the end of the day, it's when sellers are exhausted, right? So when there are less sellers than buyers, right? That's when you've bought them. Now, if everyone is already, if like, yeah, the marginal market participants, ETF participants, if they're already underwater, are those people looking to sell at a loss here, right? Perhaps, most of the volume, the sell volume there has already occurred. You could look at it the other way though, right? Like, finally there's just going to be a wave of capitulation on the ETF sellers.
It's hard to say because this cycle we have totally new types of market participants. Maybe in 2018, you could say that once we're below cost basis and people are underwater, then the average retail trader is going to panic sell because they hate being underwater. But now that the market is dominated by the institutions and these ETFs, I think these people are more conservative. They're okay with being underwater for a bit. They signed up for this volatility. And so I wouldn't really expect them to just start panic selling as soon as they're underwater.
Yeah, you could imagine like a lot of people who got into the ETFs, it was on the advice of their, registered accountant or whatever it is, registered investment advisor. And the guy would in part of the pitch would have been like, look, Bitcoin's extremely volatile. If you're going to purchase this, you have to commit to holding it for at least 4 years, or
Yeah,
like
exactly.
some sage advice like that. So like, and it's only a small portion of their portfolio for a lot of people, so they're just like, okay, whatever, that it is what it is. I'm diamond handsing this for at least one like cycle.
Yeah. And the other indicator, the other cohort that is usually interesting to look at as far as who's underwater, are the miners. I don't know if you have that production cost chart, but it's pretty interesting.
Yeah, I do. Let me bring that up.
So Bitcoin has found support at the estimated cost of coin production many times. And there's some important caveats to that metric. First of all, it's impossible to get a 100% accurate number on the average cost of production, because it's going to be different depending on geography, electricity prices, like the size of the mining companies. Everyone's got different costs. And so depending on where you look at it, it's going to be a bit different. Yeah, so the chart that you're sharing shows that Bitcoin basically never goes below that line. But there's also like a free indicator on TradingView called mining costs, and it shows that it goes a little bit below. So it's going to be different depending on where you look. But the point is that when price gets to that line, and sometimes you got to draw lines on the chart and just hope for the best. And it has acted as a good bottom signal. And just to clarify, like what actually is production costs and why it matters, mining companies have to sell BTC in order to cover their operating expenses. And that creates sell pressure near the cost. So miners are paying whatever they're paying: electricity, hosting, payroll, debt servicing, rent, and they have to pay that in dollars. So if BTC falls below that all-in cost to produce a coin, then many miners must either A, sell their BTC and their BTC treasuries, which would be a capitulation or sell pressure, or they shut it down. And shutting it down would be buy pressure, because once the weak miners shut off, now there's less new supply hitting the market, which eases sell pressure and helps price stabilize. It's honestly like, it's kind of spooky how it all runs like clockwork. So, and it might not always be a bottom indicator. And as it stands now, we're just above that cost of production. In the 2022 bear market, we went below that by about 15%, I think. And translated to, and we stayed below that for about a month. So if you translate that to today's prices, that would mean we hang out around the 53,000 level for about a month. But I think it actually could be worse, because this time the hash power is more dominated by the bigger companies that can now probably afford to stay below cost basis for a little bit longer because they've got big treasuries. Like I saw Eric Trump on X. He has this big mining facility, and he's probably losing a shit ton of money on it, like all the time. But if he has money, then he can continue to mine at a loss. So, anyways, it's a interesting indicator to watch.
It is interesting, although to be honest, I don't really get the logic of it, because I understand why a commodity rarely trades below its cost of production. And, that's just like basic supply and demand, I guess, right? Like if it costs $100 to mine $100, what is it? If it costs $100 to mine to produce a kilogram of coffee, right? Let's say it costs $100 to produce a kilogram of coffee. Once coffee costs less than $100, people are going to stop making it. If the market price for coffee is less than $100, people will stop making it, and then therefore, like, the price comes back up to whatever the cost is. Okay, but Bitcoin doesn't exactly work like that, because there's just always the same amount of Bitcoin being produced, isn't there? So I don't really understand the logic of that. but maybe I'm missing something.
I'm not going to pretend I fully understand it either. It's illogical, um, but the chart doesn't lie. Like when price gets below there, I think it makes sense that the smaller miners are going to go bankrupt. And this has happened. The hash power has been consolidating for a long time, even since 2022. You've seen it consolidate within the big players, and these big players have a lot of money and big treasuries, so they can afford to operate at a loss. I guess it depends on how much they believe in Bitcoin long term.
Yeah. All right. So we've gone through some of the pure technical analysis indicators, RSI, MACD. We've looked at this cost of production thing. We've gone through some of the cost basis indicators. So yeah, ETF holders, mostly underwater. The average cost basis still not quite there yet. Maybe another indicator to discuss is the long-term holder supply. So there's a Bitcoin analyst that goes by the name of James Check. He's an on-chain data analyst, and he's been doing the podcast rounds of late and it's talking about some interesting data. So one point that he brought up is that the current long-term holder supply is very high. So at around 14 million or 17% of the total supply. And that is close to 2020 levels before the bull market of 2020 that started then. So this is another indicator that could perhaps point to the fact that, yeah, there's just currently a large supply of coins that are static and potentially, yeah, are held by people with high conviction. So long-term holder supply trending upwards.
Yeah, that is the main use case of Bitcoin so far is hodling, and it helps its buy pressure for sure.
Yeah. All right. Some other indicators that we may have bottomed. Obviously, the capitulation event of last week, where Bitcoin dropped like 10% in a very short amount of time. That's classic capitulation. Every bottom in a cyclical market they usually end with some kind of capitulation like that. It's a major event. So we did get that. That's another potential signal that we have bottomed.
Yeah, it happened really quickly. Like maybe I'm coping, but the speed of this correction, it almost suggests that first of all, most of the pain is behind us, and also it almost looks like a liquidation event, like something to flush out the leverage and create like a scam wick, like a March 2020 scenario, rather than a grinding bear market that lasts years and years. Like it could be, if you think the 4-year cycle is dead, it could be just like a liquidation event in the middle of an uptrend. Don't want to cope, don't want to make a prediction on that, but just the speed of it is, I think it suggests something like that. Now that we've tapped, what is the 200-week moving average? I don't know. It does.
Yeah.
It does kind of look like it could be a mid bull cycle correction rather than the beginning of a depression.
All right, let's move on to another one, which is the Bitcoin is dead, the Bitcoin grave dancing. Folks have come out. So we have a few to cover here. We got, there's the Financial Times. A lot of people talking about this one. Bitcoin is still about $70,000 too high is the headline. And yeah, this author just rehashes some of the most commonly cited reasons for Bitcoin being dead, or Bitcoin being just useless. It's a failed Ponzi scheme. I don't know. Is there much more to what this author was saying? I did read it, but it has a few convincing points, like the author's saying, well, look, Bitcoin crypto got everything it wanted it wanted, right? The most bullish president you could imagine, all the like regulation, institutional flows, BlackRock buying, JP Morgan endorsing it, all the stuff, right? Sovereigns, like even like El Salvador embracing Bitcoin. And yet here we are. It seems to have run out of buyers and belief and is collapsing, right? That's sort of the thesis of this piece, I guess.
It's the same arguments we've been hearing since Bitcoin was $100. Like I wouldn't really. This is a contraindicator, in my opinion. Like these journalists, these legacy journalists, they get paid a lot of money, mostly to just invert reality and mislead the public, like routinely. Like it's well known. It's well known at this point. If you want to succeed in life, you should probably just do the precise opposite of whatever legacy media is telling you to do. They're like the devil on your shoulder trying to ruin your life. Like whether it's what to do with your money, what to do with your health, or what to put in your body, they always invert reality almost every single time. Like inverse Kramer is a well-documented phenomenon, and yet Jim Cramer still gets paid $5 million a year to go on TV and make you lose money. Like why would they do that? Like it looks like they just hate you and they want you poor. Like that's the only explanation. And I'm not accusing this author, what's her name, Jemima Kelly of Financial Times, of being a devil. Like she actually seems like quite a nice lady. I watched an interview of her. I don't think people should be being mean to her, but I don't think she realizes that a lot of the arguments in this article are, like I said, the same things people were saying when Bitcoin was at $100. Like they're saying, oh, what is it? What even is it? What value does it have? Some people are losing lots of money on it. It's the greater fool theory. What's it backed by? The narrative keeps changing. It's not being used as a means of payment. And it's like, the implication is that markets have to be 100% rational and logical in order to be legitimate. Otherwise, they're a scam that needs to go to zero. She brings up an argument that I've seen a lot, which is that like how can Bitcoin be scarce when there's a million other cryptocurrencies that do more than what Bitcoin does? But like I could say the same thing about handbags. Like Chanel and Hermes Birkin bags have been outperforming the S&P 500 for decades. Like it's a well-known thing. And these bags, they serve no purpose other than just letting women status signal to other women. Like I think it's stupid, but I'm not going to get mad at handbag owners for outperforming and telling them they're all idiots. Or I could say, how are Chanel handbags scarce when there's thousands of other handbags that are more functional than them? Like I could use a plastic bag to carry my stuff in. Like,
yeah, those bags are worthless. I could just create my own luxury brand. Therefore, Chanel has no value. It's the same argument, right?
Yeah, or like Patek Philippe
Chanel
watches. Like
these luxury brands have a network effect similar to Bitcoin, right? Like people agree that they are valuable assets.
Yeah, it's the greater fool theory, but clearly the greater fool theory is legitimate and works in every single market. So why are you arguing with it? Like I don't know why these people argue with price charts. Like, do you want to make money or do you want to not? Like it's so easy to be bullish and positive on something when it's gone up a lot, and it's really easy to be bearish and negative on something when it's gone down a lot. But that is literally the exact opposite way you make money. But these Bitcoin grave dancers just forget that because most of them are already getting paid a lot to do nothing.